There's places in the world today where you could be making double-digit growth in property prices. So you could be doing 15-20% a year, and you could be making rental yields of 7-8%. If somebody asks me what the best property investment opportunity in the world is, it's emerging markets. So we had a call this morning with some old friends of mine. They're working on they've been working for a couple of years on development in Cambodia. Cambodia is a big emerging market, and they're now growing their business and they want me to get involved. So we're looking to acquire some land over there right now for a small development, a mini resort, apartments, built around a swimming pool with a spa, with a wellness facility, and it's going to be a 3-phase development. People say real estate is cyclical, and that's true, but at the end of the day, you've got the whole globe to look at. You don't even have to look at the whole globe. Like, you've at least got a whole country to look at where you're based. Right now, for example, if we look at the UK, London's property market's down, but the north is up. There's good opportunities in the north, if you're into development, if you're into selling. So there's always, in every economic climate, there's somebody making money. You just got to make sure that you're on the right side of that. Western markets, they're established markets. There's growth, yes, but there's steady growth now in the long term, and they're lower risk. When we look at the emerging markets, especially when we go towards Asia, Africa, South America, they're markets that have got high growth opportunity, but they come with their risks. Risk and return go hand in hand. The higher the risk, the higher the return. The lower the risk, the lower the return. And you don't even have to be a super entrepreneur and a businessman who wants to take huge, massive risks to benefit from emerging markets. There's so many companies out there who are developing in emerging markets, who are building projects in emerging markets. Buy some apartments, buy some properties. You'll make high yields, you make high returns. Go do your research. Identify the world's best property market. Go and invest in that property market. You can do that, it's easy. If you research the whole world, there's various reports published every year. Knight Frank do some great reports on looking at what was the world's top performing property market last year, and what did they expect the world's top performing property market to be next year. If you look at a market that's been performing on a high for the last 5 years, that market's probably now going into a bubble stage. It's probably really hot. I wouldn't touch it. But look at the markets that have just started performing well in the last 12 months, 24 months. Look at the markets that are projected to perform the best next year. Go invest in it. What's stopping you? Anybody can do it. Yes, I do it in a different way as a property entrepreneur, investing in developments and building developments, but you don't have to do that. Go and invest in the world's best property market. Nothing's stopping you. And if you want to be secure, go research the best property developer in that market, who's a listed company, who are a public company. Go invest with them. Go research, even if you don't want to invest in a public company because the prices are really high with that developer, go research who's a good local developer with a good track record, or go research who's a credible person in your local market who is developing out there. Anybody can do it in your own capacity, so don't look at it and think, because I'm not some international entrepreneur, I can't do it. Anybody can do it. With the internet today, in today's day and age, the world is at our fingertips. We can achieve anything we want. If we look at the United Kingdom as an example, wages are relatively stagnant. GDP growth, economic growth is relatively stagnant. The whole country is built. It's all been done. The West has they've peaked. They've done everything. Emerging markets is where the growth is. Emerging markets is where people's salaries are increasing, where the GDP is increasing. People are getting more and more money. There's not widespread availability of mortgages yet. As years go by, people's incomes are going to go up. That puts up property prices. As years go by, the country's GDP increases. More and more wealth goes into the market. That increases property prices. As years go by, mortgages are going to become more common. In the early 90s in the UK, the price of property is what people could afford to pay over this stretch of 3-4 years out of their own savings. When mortgages were introduced, what's ultimately happened over the last 20 years is that affordability is stretched out up to 35 years. So effectively, people now pay for their property over their entire working life. That's where property prices will increase again, when in emerging markets, the availability of finance and credit becomes more common. So there's all that growth still to be had in emerging markets. And I would encourage people that if you really want to make high returns in real estate, look at emerging markets. Look at the new booming areas. You can't go wrong. Emerging markets shouldn't be the whole of your portfolio. Don't put all your eggs in one basket. But you need to have steady, safe investments which are close to home, which are sort of your guarantee. You know exactly what rent you're going to get. You know exactly how the property price is going to increase steadily over time. You've got that as part of your portfolio, but as part of your portfolio, you've also got to have the higher risk, high return investment opportunities.